Hey guys, it's Chris Watters. Welcome back to my video real estate blog. I'm actually on Facebook Live right now with Sean. He's got some questions for home buyers out there. And I'm going to let Sean ask that question in just a minute. Before doing that, if you want to find out where to look for homes for sale, just go check out my website, ChristopherWatters.com. Be sure to check out the coming soon section if you want to see homes not yet on the market. It's the only place you're going to find these homes. So if you're looking for stuff not yet on the market, because the market is super competitive in the greater Austin area, be sure to check out our coming soon section. If you want to look for homes, we've also got our home search tool on that website. And then if you're thinking about selling, we also have our home evaluation tool. So you know from a low end to a high end range what your home is worth. All right, so without further ado, Sean, I know you've got some questions for buyers out there. Fire away, man.
Sure. Hey, Chris. Thanks for having me on the page again. So like you said, we're going to be giving some tips for some home buyers out there. So the first question that I have for you is, if I'm a first-time buyer, basically, how much cash should I have in order to buy a house?
Great question. How much cash do you need to buy a home? So the amount of cash you need is really a function of what loan program you get to acquire the home and get financing. So I'm assuming you're asking this question because you're not going to pay cash for the house and you're going to get a loan. And so depending on what loan program you get, that really dictates, how much cash you're going to need. So I'm going to get into the weeds of all the little details, but the overarching thing you need to be aware of is there's several different loan programs. So if you're buying a home in a rural area, there's a good possibility that there's what's called a USDA home loan program where it's like literally zero down. Like it's a government-backed loan and there's no down payment required. If you've formerly been in the military, there's also the option of getting a home using your VA loan, and that's a zero down home loan. The next best thing to that is what's called an FHA loan, and FHA is only 3.5% down. So when you ask me how much money do you need down, if you're going to get VA or FHA or USDA, your down payment is going to be super minimal. FHA being the 3.5% and VA and USDA being zero. And then there's one other loan program I'll tell you about, and it's a conventional loan. And this is typically for buyers that are going to put down 5% or more. And so I want to just expand a little bit beyond the loan programs, beyond those four kind of primary loan programs. When you put a house under contract, you're going to need to put down what's called earnest money. It's kind of like your good faith that you're a ready, willing, capable buyer. And typically earnest money is 1% of the purchase price. Now this money you put towards earnest money, that gets applied towards the sales price, and it can also be credited towards your down payment. So that's the first thing I want you to write down is earnest money. That's the first thing you're going to need money for. That's a check you write as soon as you submit an offer on a home. It's for the 1% earnest money. Now that money gets refunded if you don't end up buying the house and you terminate the contract within one of the contingencies of the contract. That's a really important piece. You got to make sure you terminate within one of the contingencies. If you don't, you could be at risk of losing your earnest money. The second thing you need money for in the state of Texas is what's called your option period. Your option period is typically when buyers do an inspection on the home and all their due diligence. And during the option period, that's when buyers typically negotiate getting repairs fixed and things like that. Your option money is typically anywhere from $100 to $300, depending on the price point of the house. So it's a lot less than the earnest money. The option money gets credited, again, towards the sales price, and it gets applied towards that down payment. But if you end up terminating the contract, the money the seller keeps, and if you terminate during the option, you get your earnest money back. So the third thing you need money for is for the home inspection. So home inspections typically range anywhere between $400 and $500. So you're gonna have to pay for that out of pocket. So that's the third thing you're gonna need. So the last thing you're gonna need is the money for the appraisal. So before you buy the home, the bank's gonna require you to get an appraisal done. The appraisal is another $400 to $500. So let me just go down this list again. The four key things you're gonna need money for is your earnest money, option money, the inspection, and the appraisal. And again, all this money gets applied towards your down payment. There are some strategies where it could be considerably less out of your pocket, where you don't have to put that much up to go buy a house. And to do that, you'd have to get a VA loan or a USDA loan. where you wouldn't have any money out of your own pocket, and you get the seller to cover the closing costs. So anyways, Sean, I know that I covered a lot very quickly. What are the questions you got for me?
Yeah, so I was just going to ask, what are some of the pros and cons of maybe not putting any money down in this kind of situation?
Great question. So one of the, obviously one of the pros of not putting any money down is you can reinvest that cash somewhere else. The negative of not putting any money down is typically when you get a loan, for example, VA, USDA, or FHA, where there's no down payment or super minimal down payment, typically your interest rates are higher. Also, you have to get what's called PMI. It stands for private mortgage insurance. And that could be, $100 to $200 a month. And so it's very expensive. It's an insurance policy that basically covers the bank. And the insurance policy helps the bank in case you ever get foreclosed on. It helps the bank recover their losses. And that's the purpose of the private mortgage insurance. So it's a lot more expensive from a monthly expense perspective when you put down a smaller down payment. But obviously, you could reinvest your cash somewhere else and maybe get a higher return. I don't know. That's a good question for your financial advisor. So, anyways, what else is on your mind, Sean?
Well, another thing that I was going to ask would be about your credit score. So, what kind of credit score is ideal for this kind of situation?
So, I mean, most banks, like kind of the bare minimum credit score you need is a 580. As your credit score improves, you're going to get a better quality loan and you're going to get a better interest rate. So the real value of having a great credit score is you get a better interest rate, which is going to decrease your monthly payment. Just some really, cool strategies some banks do is they have a credit repair department that can do something called a rapid rescore. So, for example, a loan officer will run your credit and they'll see some things on your credit score and on your credit report, and they can tell you to make little tiny pivotal changes to various things, like maybe it's pay down a credit card a little bit, or pay off a car loan, and you make these small little tiny changes, and they do this thing called a rapid rescore, and it causes your credit score to jump 50 to 100 points. So if you're interested in getting connected with a loan officer, I can definitely reach out to me. I'll connect you with someone that has that ability to help you jump your credit score that much. But bare minimum, again, credit score 580. And the higher it is, the better interest rate you're going to get, the less it's going to cost you per month to get a loan on the house.
All right, awesome. Well, that's really all the questions that I had for you today. If someone had any further questions, how could they get a hold of you?
Best way to reach out to me is go to ChristopherWatters.com. You can send an email to sold@watersinternational.com, SOLD@watersinternational.com. Or just feel free to fill out a form online if you want to know what your home is worth, or you see one of our houses coming soon on our coming soon page, and you want to take a look at it before anybody else does to beat out the competition. Just ring our phone number, top right-hand corner of the website.
All right. Well, awesome. This has been a lot of great information, as always. Thanks again for having me, and I'm looking forward to next time.
Great. Thanks, Sean.